This week is absolutely action-packed with CPI and FOMC meeting minutes coming out on Wednesday. We have a very loaded plate, and I want to help prepare you guys for the upcoming event, as well as talk about some trades and ideas that I am personally looking at. Let's go ahead and jump in. So US stocks kick off the week in the red. The Dow was down more than 150 points, while the S&P was down 500, and the NASDAQ fell 0.9% and 1.9, the S&P and NASDAQ both fell 0.9 and 1.1% respectively. Basically, as market participants are expecting probably a 25 basis point, expecting another rate hike in May following Friday's NFP report. While the U.S. economy created 236K jobs in March, the least since December 2020, the unemployment rate slipped to 3.5%, pointing to still a tight labor market. Why does this matter? How does this impact the charts? Well, I'll show you guys, because the dollar's flying high and it all makes sense. Let's take a look. So as you guys can see, the dollar is absolutely mooning today, and we have to talk about why that is. With job numbers coming out on Friday and looking pretty attractive or still pretty strong, the Federal Reserve has a problem. Inflation is going up, right? But so are interest rates. But the problem is, if interest rates are not keeping up, and we'll say the pink line is interest rates, the yellow line is inflation. If inflation is outpacing that interest rate problem, the problem itself does not go away. In fact, it can even resurface. This is why so many people are now expecting the Federal Reserve to raise rates by 25 basis points in the upcoming meeting. Now, again, that is in reaction to Friday's numbers for jobs, still coming out relatively strong. Not necessarily, the weakest they've been in a while, but still strong. And why does it matter? Well, inflation is heavily contributed to by strong jobs market. Again, the Federal Reserve almost needs to crack the jobs market a little bit in order to slow this inflation if we're ever going to get this thing fully under control. This is the idea, at least in my simple phrasing or my simple understanding of how that all works. And why that impacts the dollar? Well, again, we are now ruling out the idea of no rate hikes or even cuts, and now expecting a 25 basis point hike to continue to put pressure on the jobs market. This is the basic idea of the Federal Reserve's game plan. Now, am I bullish on the dollar? Not necessarily, because again, if we take a look at the higher time frames, we're now looking at the daily chart. You can see the dollar has really come down very, very hard overall, and for good reason. It is anticipated. The market is sensing a potential pivot coming here in the future. Essentially, we have CPI numbers coming out on Wednesday. If those numbers come out cooler than expected, inflation does in fact look okay, it is very likely that dollar will roll over and rate hikes in the future will be ruled out. If not even entirely going to the point of where they're cutting rates potentially by the end of the year or going into next year. This is the market constantly in turmoil recently. We've had so much volatility. So my thought on the dollar, if we do get pops, I'd be a seller of rallies in my personal opinion, looking to buy things against the dollar, for example, gold and the S&P 500, one of which I actually have a trade on myself right now. So gold, I did end up taking a profit. For those of you guys who are regular viewers of the channel, you know that I took profits on my gold trade. If you are inside of our Discord channel, I stopped out for a profit. We caught this amazing run up here recently, but we're not able to hold this 2,000 mark. When we failed to hold that, I was out of the trade for a profit. Now, when I say profit, what I mean is I bought here, I trailed stop loss, and was able to take a small profit, but a profit nonetheless. Will I get back into the gold trade? We'll have to watch that closely going into the rest of this week. But for now, I had another trade or two trades that I wanted to go over with you guys here on the today's video. I'm long GBP JPY, and the trade is running very, very nicely. Here's your 30-minute chart where I executed this position. I went long on a pullback here intraday, and almost immediately the market has gone in my favor, which is really nice. A great shoot to the upside there on a relatively small risk for a trade. Now, in fact, in a second, I'm gonna have to manage this trade, trail a stop on this one. But for now, a really beautiful move off of this structure. Why did I get long GBP JPY? Well, let's take a look at some things here, and you might find something interesting here if I take a look at the smart money tracker. If I take a look specifically at the pound, we had a really interesting shift in pace here a little bit with the pound. We had a big increase in the most recent reporting in long contracts, putting us up to 46,000 long contracts. Now, this is still not necessarily in the clear when we look at the pound. The pound is still very heavily short as well by institutional traders, so there's some mixed sentiment here from the COT data. But what really gets interesting is the Japanese yen. When taking a look at the Japanese yen, you have a very heavy exposure to the short side relative to the long side. So again, institutional money is predominantly, when talking about the Japanese yen, on the short side of the trade, which is evident when we take a look at the COT data here as a whole. Japanese yen continues to be the most bearish in terms of institutional positioning, which is part of the reason why I chose to actually get short the Japanese yen here this morning on a pullback. So again, short meaning I went long GBP, short JPY. So I have that short yen exposure in my trading account at this time. Now, on top of that, I want to show you something with GBP JPY. If I include the minor currency pairs, we're going to take everything else off for just a second. GBP JPY right here, you can see has, if we zoom in here, 34% of traders long and 66% of retail traders short. So we know that this is a contrarian indicator in the sense that when this market is flying high, usually retail is short, and I actually like to be against retail and actually going in the direction of, the opposite direction, because generally speaking, amateur traders tend to be on the wrong side of trades. By the way, guys, if you are not already familiar with the Edge Finder, it is our market scanning software. I have a company called A1 Trading where we build tools for traders. If you'd like access to this, we are celebrating our 1-year anniversary right now, and you can get access to the Edge Finder, which includes our smart money tracker, the COT data that we just went over, the retail sentiment indicator that we also just looked at, bank signals tab, the high probability watch list, signals for 30 plus assets and pairs, and yes, it is a one-time payment for access. So the idea there is we do not charge subscription fees. You don't have to pay us every month or anything like that. You just pay for access to the tool, you get your name on there, and you can use it as long as you'd like. So if you want access to this, we're going to have one more thing I want to show you guys. If you're interested in getting access, we do have a special discount. If you head over to the link in the description, to the talk to link, it's going to send you to a direct message link where you can have a conversation with one of our support team members who's going to get you an extra special discount. If you're a YouTube subscriber here, this is for YouTube subscribers, hit this link, click tell me about your discounts, and you'll be connected with somebody who can answer your questions about the software and give you an extra special discount for the tool for a very limited time. You can also get access to our Discord channel where you can see the trades being taken. So I just took this trade I mentioned earlier. I've got 2 trades. I mentioned one, this GBP JPY long trade, going long on a pullback. I completely explain why I'm taking trades beyond just the positioning, but also because why I'm entering, why I'm exiting, where I'm putting a stop, so on and so forth, right? So that's kind of where I'm at with this GJ trade, but I also went long SPX 500, and I want to show you guys that trade as well. So of course, when I take SPX 500 trades, I have to take them on Webull, which is my brokerage that I can trade on here in the US. So I can't trade CFDs as a US client, so I trade instead on the stock exchange, and I just trade the S&P that way. So I'm long SPY, and I'll show you guys the chart breakdown of this. Look at that GJ flying here as we get going. So the S&P 500 again tagged a level of support here recently and has just so far reacted well. So I went long right around at the bottom where this blue line got hit, this trend line to the upside. I'm expecting the market to continue up. If it does continue up, I'll look to trail stops. And for those of you who are on the Discord, you'll get my notification if I do update a trade there or if I trail a stop. So part of the reason here is, again, you might ask, why would you be long dollar when we're now expecting a rate hike? Well, in my opinion, rate hikes there is likely 1 or possibly 2 rate hikes coming in this market. But it does seem like we are getting closer and closer to a potential top. And if inflation numbers do come down this week, it is very likely the S&P 500 could rally very strongly. As again, it will be expected that the Federal Reserve will be less and less likely to continue rate hiking and may even pause or even cut towards the back half or going into next year. So we'll watch this very closely. But again, on this dip, I'm going for a momentum trade. Markets are trending higher overall. I'm looking to capture this. If it does not work out, I will be be stopping out at around 40.40 where I have my stop loss. So I'm in a good position with this trade. I know my risk. I believe that we have a good risk reward, and we'll see if we can capture some of that upside. We'll take one last look at that GBP JPY trade, see how things are going. So again, I am long as of this morning. For those of you guys who caught the group, the trade inside of the group, then congrats. This GJ trade is flying, which is absolutely fantastic. Caught almost the perfect bottom here before a rally in the pound yen. Now yen crosses across the board are up today. Here's dollar yen, which is absolutely flying high off of that, again, that expectation of another rate hike, causing the dollar to strengthen tremendously. Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.